So, of course, guys, welcome back, right, to another lesson, Dripanomics Tutorials Pty Ltd, right? And today we are covering Accounting 1B, Chapter 1, Lecture 1, which is companies, right? So, I hope that everyone is well. I'm going to start sharing my screen with you guys, and please do give me a sign that you guys are able to see what I am presenting now. Give me a thumbs up if you may. Okay, good, right? Can someone also just in the WhatsApp groups just say, hey guys, we're about to start, so that those that join, they do join, but I'll add them maybe after, I don't know, a few minutes or so. Right? Good, right? So I hope you guys can see my screen, right? So what I'm going to do, right, is that I'll just be sharing this part of the screen with you guys, and then if there's any questions you guys may have, you are more than welcome to just raise your hand, right? And then that's how we'll engage and we'll continue our classes, right? Uh, I also need you guys to know that these slides are the slides that which we also used for last year, where last year we also produced distinctions for our Accounting 1B students. So please, guys, trust that you are in good hands. Those that are already paying members, they already know because they passed here with distinctions, so that's fine. Okay, let me just accept Leseho and then we should start, right? So again, guys, as I mentioned, we're having a conversation, so let's just engage with one another, all right? Okay, we're about to start. You see latecomers now. Fine. So, Accounting 1B, companies, and in this context, we are going to cover shares. So, it's around 14 slides. It's not too much. And I also have notes written down in my book to make sure that I better explain what's maybe not said in the slides so that no one is left behind. All right. Okay. So, what is a company, guys? Right? You guys are going to be dealing with this a lot more also in what we call Commercial Law 1B, right? A company is a legal entity which is a juristic person, right? Incorporated in terms of the Companies Act 71 of 2008, also referred to as the Act. It is an entity which exists independently of its owners, whom are the shareholders. So again, we're having a conversation. Company, juristic person, natural person. I assume you guys covered this in Commercial Law 1A, right? So most of this shouldn't be coming as a shock. Is that correct? Do you guys know what a juristic person is, guys? Okay, those that managed to pass commercial law, guys, do we know? Justin? Yes, I don't think Justin did commercial law. Justin, did you manage to do it or did you manage to fail it? Which one did you excel in, my brother? It's a joke. It's a joke. Hi, Justin.
Sure, Remo. Hi, how are you?
I'm good, thanks, and yourself?
I might. I didn't do commercial law, so I need.
Yeah, so you're gonna do it next year, right? And because you're doing BMA, business studies. Okay, fine. So a juristic person, right, is a okay, let me first start. A company, right, is what we call a juristic person. And a juristic person is a person that has its own rights and powers and is able to inherit what we call responsibilities and obligation and debts and so forth. Why? Because primarily we do this for separation of ownership, and we also do it of separation of duty so that shareholders have what we call limited liability. What do I mean by that? We have what we call a juristic and a natural person. So a natural person, Justin, I would like to believe is you and I. You are natural. You are a human being, right? And you have rights and you have obligations and so forth, right? You have the right to this, the right to that, and whatnot. You're a natural person. You have 2 ears, a nose, eyes, and so forth. A natural person, a human being. Then we have what we call a juristic person, which are companies. So companies act also in their own interest as juristic people, meaning that companies can have assets and they can inherit debt in their own capacity independently from the shareholders whom are the owners of the company. Is everyone okay with that? So this is for accounting 1B and commercial law 1B and 1A, I think. But yes, are we all on the same page, guys, in terms of what we call a juristic person? Thumbs ups, guys. Are we all on the same page? Okay. Right? So, no, this part is not really serious. Fine. Yes? Is there a hand? Hi, Miss Baloyi. How are you, ma'am? I can't hear you, Miss Baloyi. Is that a mistake or are you speaking? No, I think Miss Baloyi was there maybe with the older brother or older sister, you know. Maybe it's a mistake. Maybe they're just pranking each other there. But if you do have a question, Miss Baloyi, you're more than welcome to just type in the chat box. Ne? Fine. So we have different companies, guys, as I would like to believe, right? We have what we call profit organizations and non-profit organizations, and then they can be categorized into what we call state-owned enterprises, right? We have then what we call public companies, and then we also have what we call private companies. Are we all familiar with that, guys? State-owned, public, and private companies, right? Please give me a thumbs up. Fine. A state-owned company, I would like to assume that you guys know exactly what that is, right? State-owned is what? ESCOM. It's state-owned, meaning that it's owned by the state, right? The government owns it. Then we have what we call private companies. Can you guys give a clear example of a private company, guys? Don't go too far. Don't go too far. It's right here. Private company. Yes, yes, yes. Yes. You see, clock it. You see, we are what we call a private company, Pty Ltd. And then furthermore, we have then what we call a public company, which is then Ltd, limited, right? And then in South Africa, public companies deal with what we call shares, that which are bought by the public on what we call the Johannesburg Stock Exchange, where it is a security or it is a market for all public companies in South Africa to exchange shares for money. Are we all in agreement and are we all following one another? If I am moving too fast, I am also able to repeat what I just said, guys. We have what we call state-owned entities, right? We then have private companies, you know, yours truly. And then we have public companies which are listed on the Johannesburg Stock Exchange and are trading. And shares are bought by the general public. Fine. Right? We should be fine with that. So, examples of companies, we all know these ones. These are what we call public companies. It's Nike, we have JP Morgan, we have Nescafe, we have IKEA, we have Gucci, we have L'Oreal, we have KFC, we have Shell, Visa, Nivea. Is that Johnny Walker? I wouldn't know, but I'm sure those that drink, they know it very well, right? Yes, those are what we call public companies. And then an example of a private company, of course, we shouldn't look too far, guys. The charity begins at home. It's us, right? It's us. We are perfect. So far, so good, right? We all understanding what's going on. This is us covering the theory part of things so that we understand the generalizing of what we are going to do going forward. Is everyone okay? Are we all on the same page? Okay, fine. So, what is a legal entity? A legal entity is something that has all the legal powers and capacity of an individual, right? And then the types of legal persons, as I've mentioned, we have what we call natural and juristic. And then we're also covering the benefits of being a separate legal person, right? There's administrative ease, there's perpetual succession, and then there's tax advantages, right? What do they mean by perpetual succession? With a legal person or a legal entity, or rather, if you can say a private company or a public company, there's what we call perpetual succession, and you guys should have done this in business studies or BMA. Perpetual succession means that the business is able to continue for a foreseeable future, even after the death or change of certain management. However, with other forms of ownership like a sole proprietor or a sole trader or a partnership, there is no perpetual succession, right? Because once a partner dies under a partnership, the business has to then dissolve and then create a new form of partnership. And then, as a sole trader, if a sole trader happens to pass away or stops the day-to-day running of the business can't continue operating because there is no longer the sole trader. So, do you guys understand what is meant there by perpetual succession? Okay, that's pretty much straightforward, right? And then in terms of administrative ease, it's much better. Why? Okay, with businesses, right? Once you get to a certain level or once you get to a certain point, guys, it's very important for you guys to be able to separate business from personal, right? For tax purposes and for other reasons, right? Why? Because if you have a business and the funds are going to, for example, a personal account, and then you are spending the business money and there's no separation of the two, things tend to get tricky. So at the beginning, when the money that is made is not that substantial, it's ideal. That's the easier way to do things because there's no much admin, right? But the bigger you grow and the more expenses you make and the more money you make, it's within your best interest to then separate the two so that one has what we call personal and one has what we call business. Because why? The person is a natural person, you and I, and then the business is what we call a juristic person, and it can also inherit its own debts and assets and so forth. Are you guys okay with that? Good. So beyond accounting 1B, right? Another thing that I'm trying to learn when tutoring you guys is also to teach you just beyond what's going to be taught, so that also in real life, guys, you implement, you do. It's one thing to learn about accounting, but if you actually learn about it in real life, that's where the fun is. Do you understand? So I hope I'm not boring you guys with all of this content. But if I am, we'll get to the accounting part that which you guys get tested. Because some people, really, they just came to cram. I know they are real life, right? Another benefit of us having separate, legal entities and so forth is that the company assets are owned by the assets, right? And the legal liabilities will be paid by the company itself. Therefore, the maximum that which the shareholders can lose, and the shareholders, remember, are the owners, is the capital contribution that which they made to buy their shares. Therefore, they have what we call limited liability. Are we all following? Are we all following, guys? So, a practical example of limited liability. So, if you have a business with a friend of yours and you guys registered and it's Pty Ltd or it's Ltd, we have what we call a separation between the two. So, if the company goes into bankruptcy or it's owing a lot of people, guys, the shareholders will not be held personally liable for those debts because the company itself, it's its own juristic person, so it's responsible for that. So the most that which shareholders can lose is their initial investment, the money that which they contributed to buy shares. But if the company is owing millions, they can't come to you now as a shareholder. They're like, no, man, listen, the company owes this amount of money, but we are coming for you personally. We are coming to repossess your car. When a situation like that happens, it's very, very tricky. What do I mean by that? Ideally, people are not supposed to lose their personal belongings when their businesses go south unless we have what we call unveiling of the corporate veil. So unveiling of the corporate veil, I think, is also something you guys are going to be tutored or going to be taught in accounting commercial law 1B. And the corporate veil, basically, ideology says that when there is gross negligence, right, and there was malicious intent by the shareholders to get the company in the financial predicament it finds itself in, then we're going to uplift the corporate veil, and then we're then going to come personally for the shareholders, and then they will also be liable to pay for the company's debt, because what they did was very wrong, and perhaps maybe had malicious intent, and they knew what they were doing when they were getting the company into a financial predicament or into financial distress. Are you guys following me, guys? This is a lot, ne? I know. Just breathe. So far, so good. Is there a question that one might ask? Let's just engage before I continue. Now we are thinking about companies, guys. We are thinking about businesses. Is it advised to file tax returns even though your company has not yet started trading? Tekiso, what exactly are you going to be filing if you haven't yet traded, my brother? Out of interest sake. Because your tax returns are just gonna be 0,000, because you haven't yet made any profit. You haven't made. There's no pay as you earn. There's nothing tax related. There's no VAT. There's nothing. So I don't think it's advisable, because you are yet to start trading. Hence why even most small companies or sole traders, for VAT and filing, no, it's not recommended. It's not recommended, because there's also a lot of admin that comes with that, and you need to pay accountants and tax practitioners to make sure that those things are filed yourself. Or you can go to SARS yourself if you can't afford, to have a lawyer or an accountant, and they will show you how to file your stuff. But if there's no trading that has yet begun, no, there's no need for you to file anything. All right. I hope I answered your question, Tekiso. Is there anyone else perhaps with a question? Justin, Kanyisile, Zikote, you guys are awfully quiet. Are you guys writing down notes, or you're like, this guy's talking, he's talking his nonsense again? Kwezi, Lulama, Mpo. People are at home, they're watching Netflix, we are here. Okay. Sanele, hi, Sinazo, Tando, Togozile, Dumelo. I hope you guys are okay, ne? Since this year we are using a different textbook edition, is the content going to be different compared to last year? I don't think so. It's gonna be the same. The changes are going to be very, very, very minimal. Just like the only thing that might change could be the new formats, but besides, everything else should be the same. So in terms of the content that which we are teaching and journal entries and whatnot, certain things I don't think can change. But if there are any changes, of course, we will adopt the new model and make sure that the content we teach you guys is in alignment with the latest textbook edition and so forth, and what's being tested by your lecturers and so forth, right? But so far, I don't think there's gonna be much changes. Much changes will be maybe the format, which is very similar to accounting 1A. Only that can change. But beyond that, the content in itself, in its core principles, remains the same. I hope I answered your question, Dakalo. Okay. So, if the company has all the powers, then who owns it? One might ask. So ownership falls under the shareholders, who are the owners of the company, and they own the company through what we call shares, which is a unit of ownership in a specific country, right? However, there is a difference between ownership and control, right? Ownership is owned by the shareholders, and then control is still controlled by shareholders. However, they appoint people that are called directors that run the day-to-day activities of the business, right? And we have what we call a BOD, which is a board of directors. Most of this information will be very clutchful for you guys if you are doing commercial law 1B and accounting 1B next semester. This is very important, right? Are we going to get accounting 1A content in the test or exams? No, we are not going to get that. We are not going to get that, right? Why? Because accounting 1A is where it is in the past. 1A. 1B is a different beast, my sister. The only things that which should be the only things that you should take are the core principles, which is what? Journal entries, VAT, those things won't change. But accounting 1B focuses more on companies and trade inventories and PPE and intangible assets and investment property in great detail. So the content is different, right? Accounting 1A was an intro. Now we are continuing and we are adding even more content, right? Okay, hope I answered your question. So we have what we call a BOD, which is a board of directors. They are appointed by the shareholders, right? And it is the shareholders that appoint the directors, whom then approve dividends that are proposed by the directors, and then who also approve future share issues and approve our appointment of auditors and AFS, and also most shareholder decisions are made at the AGM, which is the annual general meeting, right? So shareholders, guys, they are the ones that approve how much dividends they are going to get, but those dividends are proposed by the board of directors, that which are hired by the shareholders. And then a lot of decisions are made at the AGM, which is the annual general meeting, where shareholders now discuss the major key points and major decisions about what has happened in the last financial year and so forth. But the day-to-day running of the business, guys, is done by the directors, who are appointed by the shareholders, whom own the business. Are we all following? This usually happens with public and private companies, because that is where our focus is. Are we all okay with that? Okay, good. So as mentioned, the categories of the companies: state-owned, Dripanomics, and public entities, right? Or public companies, right? So now, again, as mentioned, these are just examples. What type of company is Eskom, guys? State-owned. And then what type of company is Pepco? Pepco is the parent group that owns Pep, guys. What type of business do you guys think Pepco is? Pepco? It's a public, right? Pepco is a public entity which is trading on the Johannesburg Stock Exchange. If you don't mind me sharing my screen, we can even go as far as checking, right, how much a share of Pepco is on the JSE, right? Pepco, right? Pepco share price. Just want to see something, because I want to confirm JSE. Yeah, it should be a public company, right? So on the JSE, one share of Pepco, is this ZAR or cents? It's cents. Yo. So one share of Pepco, guys, and can you see there was a plus 0.7% increase, is 2,723 cents. So if it's in cents, to get the rand amount, you should divide that amount by 100, which should give you, I think, how much? 273,000. 200. What's going on? My math is shaking. 27 rand and 23 cents. So one share of Pepco, guys, as you can see via the JSE, is what? 27 rand 23 cents. Is Pepco the holding company? Yes, Pepco is the holding company or the parent company that owns Pep, and then I don't want to make assumptions, but I know the owner Christo Viso also owns, I think, ShopRite and so forth. But I think Pepco is the holding company. It's the parent company, yes. And then we also gonna deal with what we call subsidiaries, yes, which is a company that is owned, or is a younger brother or a younger sister, in simpler terms, or for lack of a better term, than other countries. A perfect example would be Meta. Meta is a holding or a parent company for Facebook and WhatsApp, which are subsidiaries. Are you guys following? Is everyone okay? Are we all on the same page? Okay, good. So then we have, what type of company is Dripanomics? Man, at this point, if you don't know, forget about it, right? And then we also have what we call Coca-Cola. Coca-Cola is what? a public company, and it's traded on the New York Stock Exchange, if I'm not mistaken. Yes, because it's part of the top 500 companies in the world. So let me just get that. Right? Yeah, I think it's on the JS. It's on the New York Stock Exchange. You are right. No. You are left, Justin. You are left. You are left. Get it? No? Yes, sir. Yes, sir. Shut up. Right. I see people are laughing, so I'm doing something right. Good. Manje clean. Okay? So now we are on page 9 of 14. We're almost done, guys. We're gonna start to the real accounting stuff. I just need to make sure you guys understand everything. So now that you guys know what a company is and the different types, how do I then start one? You know, we have to do what we call incorporate, right? Or simply put, just go to the CIPC, which is the what does the CIPC stand for? Corporate inter I forgot. Something incorporation. I think something incorporation, patent, whatnot. I forgot, guys. I forgot. Slipped my mind. But you need to, when you register a company in South Africa, you have to go through what we call the CIPC, right? CIPC, and you have to incorporate your company. Once that's done, it needs either one or more persons to incorporate. By persons, they mean people, right? Then you have to complete and file and sign what we call a memorandum of incorporation, which you'll also learn more about commercial law 1B. And then you need to also file a notice of incorporation, which is NOI. Then once you've done that, the commissioner issues a registration certificate alongside the MOI. And then within that MOI, you're going to have to then have the rights, duties, and responsibilities of shareholders, directors, and other persons involved in that specific company. And then when you would like to change that MOI in terms of anything that relates to the admin, it can be amended by a court order, the board, or a shareholder special resolution. Are you guys following? So for those that are interested, right, in owning a business one day, you would have to familiarize yourself with the CIPC, which is the Corporation Intellectual Properties Commission, mentioned by Tiki. So thank you so much, right? It's very easy to start your own company, guys, on the CIPC. You can even go as far as going to YouTube and typing how to register company on CIPC. Certain things don't need accountants and tax people, especially when you are very, very small and it's just a concept you'd like to just begin and so forth, and you see great potential, right? That is just the word of advice, just going forward, right? However, if you can tell, hey, that this one is bigger than you, for example, if you are dealing with something big like technology, or you want to own a trademark, or you want to own a patent, that one, my brother or my sister, is bigger than you. There, you need to make sure that you speak to the relevant lawyers for patents and whatnot. And if you cannot afford a lawyer, you are more than welcome to just speak to like the law clinic at UJ, or like VITS and so forth, right? Okay, fine. So now, it's unfortunate that the people started leaving. Now we are dealing with accounting now. You see, God's timing is perfect, guys. Okay, now it's no longer theory. Now's the real work now. Now, if you weren't listening, please listen now. Ne? Let's lock in. So, we have what we call the Companies Act of 1973. And the Companies Act of 1973, which was the one before the 2008 one, basically stated that we had what we call no par value shares and we had what we call par value shares, right? Let me go back here. This I need you guys to log in now. So par value shares consist of what we call our share capital and our share premium. And no par value shares only affects our share capital. In grade 12, if I'm not mistaken, right, they only dealt with no par value shares because that is the latest one of the 2008 Companies Act. However, for accounting 1B, you might find out that in the test they might ask questions about par value shares, which then relate to 1973 Companies Act, which have both par value and no par value shares, right? And usually this is done to test you guys to see if you guys really know what's going on. I know that this is all still brand new. Don't worry, guys. This is just the first lesson. We are just covering the theory, and then we will also do a bit of questions and examples here and there to make sure that we are all on the same page. Right? So, as stipulated in the MOI, the number and classes of shares in the MOI deal with Class A, Class B, and Class C. However, for Accounting 1B, you will only deal with Class A and Class B, which is ordinary shares and preference shares. Right? Ordinary shares and preference shares. For interest's sake, would you guys like to know the difference between ordinary and preference shares? However, I don't think that one will be tested. Or do you guys just want to know for interest's sake what the difference is? Just please type, guys, in the chat box. For interest's sake, would you guys like to know? Hello? Okay, I'm seeing 2 yeses, so I'd like to believe that yes. So, at face value, guys, the difference between ordinary shares and preference shares is in the wording itself, ordinary and preference. So with preference shares, one is given a preference, right? So if you as a shareholder own what we call preference shares, you are given a preference when dividends are being paid. You are most probably going to be paid first because you are given a preference. And when a company is going through, I don't know, liquidation or bankruptcy, you are also given preference in terms of the amount of money that which you can cash out. We prioritize you first before other shareholders, right? However, the disadvantage with preference shares is that you can only earn X amount of dividends based on the percentage that it's given. However, the advantage with preference shares is that you are given preference, meaning that it's less risky. So depending on the type of investor you are looking to be, or a shareholder that which you are looking to be, being a preferential shareholder has its benefits because it's less risky. However, in terms of the reward also, there's less reward because you are carrying less risk. Are you guys following? Can you please give me a thumbs up? Good. And then in terms of the ordinary shareholder or the ordinary shares, those ones are just ordinary. When the business, right, is doing well, right? When the business is doing well, ordinary shareholders tend to benefit more depending on how much is allocated by the what you call it, by the directors. However, when in terms of bankruptcy purposes, right, ordinary shareholders are then looked at last because they carry the most risk, right? So more risk, more reward, but more reward, more risk. And then Justin here is saying the voting. In terms of the voting, I'd have to go back. It slipped my mind. But also there's an aspect of the voting part which also contributes to the difference between shareholders, between preference and ordinary shareholders, right? And remember, guys, what I'm telling you now is just for interest's sake and maybe could be tested for commercial law 1B. But for accounting 1B, what I'm just telling you now is just a brief background so that you can understand the journal entries that which we are going to make in a few moments. Right? Yes, Justin, I see that your hand is raised. You're more than welcome to unmute.
So Remo, in terms of like voting for preference, so I have a question. So it says here, assume that the whatever it's 6%. So it says vote proportionally, but only in respect of an issue that affects the right of the 6% preference shared issues. So what does it mean? Like you only have a right to vote over like the 6%. What's going on here?
Step by step, Justin. We are not in a races. But to answer your question, that 6%, usually that 6% also indicates the number when the dividends is paid. Whatever dividends is paid with preference shares, it's gonna be based on that 6%. So it cannot be more than that 6%. Hence why I mentioned that with preference shares, in terms of dividends or in terms of rewards, it's far less than ordinary because you are more risk averse in that context, right? So, however number of shares with those preference shares, because I'm sure when we do more examples, you're gonna realize that they're gonna be like there's 100,000 preference shares at 6%. What they basically mean is that when we get dividends, we're gonna get dividends on 6%, not necessarily more like ordinary shares where it's going to be more than that 6%, because with ordinary shareholders they carry more risk and whatnot. But that is going to be more clutch in lecture 2. Right now we are still focusing more on lecture 1. You understand? We are still, this is just the intro. We'll come back to those when we're doing like question banks and so forth. Don't be worried yet, right? We still have 2 weeks to chop this up, right? Okay. So as mentioned, we're only gonna be dealing with class A and class B, ordinary and preference shares. Very important. And then again, capitalization of a profit company continued. When we amend our stuff, we can amend whatever we want to amend through amending the MOI, the board, and the notice of amendment. This again is not significant. This is just for those that would like to know additional information, right? And then now also, this is common sense now, or it should be common sense, because this is where now we are going to apply what we've been talking about now, right? So with issuing of the shares, guys, there is a resolution by the board. And when you issue in a private company, you issue shares to specific individuals because you're not trading on the JSE. And then subsequent issue. So after the initial first time you issue shares, if you want to issue shares again in a private company, the existing shareholder has rights to subscribe before any other person. What do you guys think is meant by that? When they say that the existing shareholder has a right to subscribe before any other person. When you hear that, you know, in English, okay, maybe the English is a problem, but like at face value, when you hear that, what do you guys think? Tell me, guys. When they say that for a private company, the existing shareholder has the right to subscribe to those shares, what is said by what is meant by that? I think in Zulu, we would say ukuthi i-shareholder inayo i-right, yeah, uthi i-subscribe to la ma-shares qala. Yeah, yeah. My Zulu is improving, ne guys. Mina nginsizwa type shit. Nope, not improving. Okay, it's bad. I see my Zulu people are quiet. Yeah, tough crowd. What's going on, guys? Talk to me. What do you think is meant by that? Guys, there's no right or wrong answer, eh? When I start asking questions, people start leaving. Guys, what's wrong? Why nienza so? Balele. Oh, balele.
Rem, so me, I think what like it means that like before for say the issuing of shares or like the like the intention to issue shares is like advertised to the public or anyone who's not a shareholder. It should be first told to the people that are like in to the shareholders, the existing shareholders of the company, which like we intend to issue shares, and they must give them sufficient time to make a decision whether they will buy those shares or not.
Oh, wow. So smart. Yes, Justin. Oh my gosh, you got it. Go, Justin. Absolutely, Justin. That's the case, right? So, preference is given to who? The existing shareholder in a private company. So, no, but apparently I must not make those jokes anymore. So, yeah. Can I make a joke, guys? But no, guys, these are the jokes that get me cancelled. I must not make jokes. No, no. They are watching, guys. They don't want me to make jokes. But I'm joking, right? So, for example, to make you guys understand, guys, in a private relationship between two partners that love each other, when one of the partners would like to get another partner, they first need to consult with the existing partner. Do you understand? Yes. However, if it's a public company, and in this context, it is a public relationship, we just offer the shares to the general public without having the need to pass by any shareholder. Do you guys understand what I'm saying, Mara comrades? Are you following what's being said? Are you laughing because you understand the work, or you are laughing because you are trying to assess whether what you have going on is public or private? What's going on? It makes sense now. You see, Justin. So there was a reason. No, I'm joking, Justin. I don't know your real life like that. I'm joking, ne? It makes sense, ne, guys. If you are able to understand that aspect of the relationship, the business side, guys, will make sense. Because with a public company, what we are saying is that you issue the shares to the public via a subscription contract. Subsequently, there's also an additional issue. That one is easy. You understand? Subsequently, when you issue shares, okay, not subsequently, initially when you issue shares to the public, you invite them, guys. You invite them. You're like, hi, guys, we are here selling shares. Come by. However, when it's a private company, you first have to consult with your partner. You are like, partner, I am thinking of selling shares. I would like you to first have, time to assess if whether you'd like me or you'd like to buy these shares or not. You can assess the risk and the benefits and then make a decision before we can offer to someone else. Is that fine? That's fine, right? Good, good. So now, okay, this is where it gets late. This is where it gets late. Balanama notes. If you can, please do take out your pens. We are going to start asking questions. There's a question here. Oh, I see preference shares are like an open relationship. No, 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 Matume. No, no, no. No, 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 no. No, 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 Matume. No, no, no. You see, this is the problem with relationships, and no, Matume. Preference shares, Matume. Wait, if I was to contextualize it to relation, no, Matume, you're excited now. I can see what you're doing. You're cooking. You're cooking. Preference shares, Matume. There's a difference between ordinary shares and preference shares. Ordinary shares in this context are normal shares, and preference shares are shares that have preference. So those shareholders have preference. When I was making the connotation of the relationship aspect, I was saying the difference between a private company and a public company is that a public company, when they offer shares, it's basically like an open relationship, Matume. A public company. Why? Because they offer shares to everyone. As long as you have money there you can buy. That's right. That's fine on the JSC. And then a private company, that is where now it's a closed marriage. Now it's very tight. It's very intimate. It's one partner. You are very monogamous. You don't want problems. Can you see, Matume, how you can relate the two? So the open relationship would be, in this context, the public company. But the private company is very that private. Can you see, Matume? Okay, yes, yeah. You're cooking. We are cooking. Now we are on page now. Sharp. So, another cheat code I need you guys to understand before we even start generalizing, is that we have what we call subscription and issuing of shares. We invite people to subscribe for shares, and then as a company, we then issue shares. Right? Right, guys? We invite people to buy shares, and then we have what we call issuing of shares. Those are two different things. Right? Justin, talk to me.
I just want to clarify one thing. Is it like a application and like allotment?
Yes, you are too excited, Justin. Where did you get the content? Relax, Ivan. Relax, guys. Relax. Yes. Its application and allotment is what we call the subscription part. And then the allotment is called the issuing. Justin, relax, man. I'm getting there. You're confusing the other enemies now. Relax, comrade. Right? Fine. Let's do this now, ne? Nope, this is the wrong document. So we have no, man, not AC Ltd, guys. Issue. I made a mistake. Wait, it can't be AC Ltd. It has to be. Let me just correct it quickly. Sorry. Yes, you guys will get sick of us. I know. It's fine. No, but let's assume we're a public company now. Yeah, we are big. Let's say we are big. Yes. Can you guys all read? Did you guys see the name change? Is everyone fine? Yeah. Ni hao, ni hao, ni hao, ni hao, ni hao, ni hao. So, Dripanomics Tutorials Ltd, on the assumption that it's a public company, incorporated on the 10th of July 2022. Authorized share capital 3 million ordinary shares, no par value. So if it's no par value, it's going to affect what? Our share capital, because it's the Companies Act 71 of 2008. Okay? Ahead. Again, who here did accounting in high school, and here who did not do accounting in high school? Okay. Oh, thumbs down. Oh, balele. Okay, we are together. Just guys, for those that didn't do accounting in high school, can you just send a laughing emoji? Because if you don't laugh, you'll cry. If you don't laugh, you'll cry. Yeah, yes. Very funny. Woo! Let's lock in now, ne guys? Let's lock in. Okay, guys, I'm not sure if you're laughing because it's funny, or you're laughing because if you don't laugh, you'll cry. But let's log in, ne? We have what we call authorized number of shares, and we have what we call issued number of shares. And I'll make examples. Authorized number of shares are the total number of shares that which a company can issue, and issued number of shares is the total of shares that which a company has issued. Are you guys understanding that? It's very important. Very, very important. Must I repeat? So authorized, right? Number of shares are the total shares that which one can issue, and then issued shares are the number of shares that have already been issued. Are you guys following? I'll make an example. I always like making real life examples. Dripanomics, guys, has an authorized number of shares, right? Which are 100. However, from that 100, how much is the maximum that which we can issue? 100. But if we issue 50, how much are left to be issued that we can issue? Is the difference, right? It's going to be 100 minus 50. So what does this mean? We can only issue a maximum of 100 issued shares, of authorized shares, which is 100. But if we issue 50, 50 is what was issued, and what can be still left over to be issued is another 50. Are you guys understanding my example? Let me make another example. We have what we call a budget. If your budget is 100 Rand, Barcelona, irrespective of how much you can want to spend, you can only spend 100 Rand. You can only spend 100 Rand. The problem now with people like Justin and Zigote, because I know they are real life, Zikote has 100 rand. He goes to Capitec. He does an overdraft. Jiggy jiggy. He spends 1,000. Guys, that's wrong. Don't do that. Don't do that. Don't do that. Ne? If 100 rand is what you have, guys, use that 100 rand. Right? So going back to accounting, if your budget is 100 rand, you can only spend how much? 100 rand. So if you spend 50, you are left with how much? 50 rand to spend. So how much have you spent? 50 rand. Spend in this context is issued 50. However, the authorized was the 100, which was your budget. Are we all on the same page? Right? Are we all good? Okay. Just for interest sake, is there anyone so far in their tender life? Because I assume you guys are very young. Is there anyone that has already had what we call an overdraft, guys? Which equals a negative bank balance. You can be honest. It's fine. I just want to see something. Have you had what you call minus something in your account? I'm seeing a lot of thumbs up. Tekiso says no. Okay, so Tekiso, you've been soft, ne? Justin, also you? Very soft, you know? These are what we call, trust fund babies. Yeah, trust fund babies. Anyone with a negative? Oh, Matome. I just had a feeling Matome just, had a negative bank balance. No. I can just tell by the name Matome. And I know you are paid, Matome. You are paid, Mukwena. You have to be paid. Paid people love overdraft, Shem. They love overdraft. Mararemo. No, Matome. I can tell by the name. There are certain people they are just they are meant for overdraft. Like Momo, boom, Matome, Puma, Garabo. So you can just tell the name is giving overdraft. Yeah, it's just giving. Puma, Liseja. One of those ones. Ramahoshi. No, it's giving overdraft. Right? And then, yeah. I'd mention other tribes, but those ones, they shoot me. Pumadi Mecha, Madi Mecha, Tewoho. It's giving. Right. So, are we all on the same page, guys? We understand. And then, people like Justin, you must be very careful of black people with English names, ne? Yeah, you think they have money, you find out, it's not really money in there, So they tried, but it's not trying. You understand? I'm joking, Justin. Are we all on the same page, guys? Are we understanding what we are talking about? Bukahiso so. No, guys, my name is Kahi. Wait. Takalo, you're not funny. Hey, Takalo, you're not funny. Bukahiso are still safe. They're still safe.
Oh, was I need to be honest? You're the first guy so that I know that makes sense in my life.
No,
You're the first.
that's not a compliment, Justin. How do
I know.
you expect me to take that? Must I laugh with you now?
You're the only one.
No.
I have cousins who are named Kahiso. None of them make sense. You are the only one I've never in my life. You're the first one.
No, guys, I'm special, guys. I'm one of one, guys. I'm special. But yes, I see everyone is fine. Everyone is laughing, guys. As much as you must laugh, we must still get the work done because we are now dealing with the generalizing aspect of things, ne? Mara, doesn't Kagiso mean peace? Yes, Kagiso means peace in Sotho, Tswana, and also Spedi is Kagisho. It does mean peace, but it's very far from peaceful. Have you not realized that people that have names, they don't live up to their names? For example, Tandolwetu, Butando, those people, they just have hate in their heart. Like, it defeats the purpose. It's like, it's the opposite. You understand? Temba, you can't temba. Like, Temba you can't trust. You can't trust. Temba. Who else? Like, these weird names. Like, Jabulani is always angry. There's no happiness there. Jabuli. I don't know why, but that's just how it is. But let's go back, guys. Let's go back. We're almost done, right? I'm waiting for the part where we all get distinctions. No, Dagalo. If you're a paying member, we've already got the distinctions part. If you're not a paying member, no. Come this side. The distinctions we already got. So when we are still waiting, the bus has already left you. But there's a next stop now, which is this bus. If you enter the bus now, Dagalo, you will be safe. you will get to your final destination with 1B. We will be here. Text us now, Dakalo. You know us. We are there on WhatsApp. Don't play hide and seek, Dakalo. And I think you are vendor, ne, Dakalo. Mbodi's vendor, ne? Henda barimini. Ndione. Taishi. Right? Good. So guys, let's log in just one more time. We're almost done. Because I wanted to do more, but I just want this to be light. We are flatting. Step by step, not in a races. So Dripanomics was incorporated on the 10th of July. Authorized share capital is 3 million ordinary shares, no par value. On the 20th of July, we invited the public. So this is an open relationship, right? Why? Because it is a public company. For 1 million ordinary shares at 30 Rand each. The closing date of the applications is the 15th. And then on the 15th, the subscriptions and applications for all 1 million were received by the business. And then on the 30th, the directors issued all of the shares. So now, this is very important. When we generalize, I mentioned we need to deal with what was subscribed, and then we also need to deal with what was issued. So I'm going to bring a new concept to you guys, that which you might not know, which is called a temporary account. But you guys have heard of a temporary account, ne? No, paying members have. Who here doesn't know a temporary account? It's okay, don't be shy. No. Listen, it's okay. To pretend during recess, guys, is one of the worst mistakes you can do. Because the brain cannot differentiate between recess and real life. You might find out you're pretending in recess, can also in the test you pretend. Then you come back next year when we are now on the JSE. We don't want such problems, guys. On the JSE, ne? When we are big now and we are a public company, we can't have people. No. So we need to make sure we're on the same page. So, what was I saying? I was referring to what? What was I referring to again? A temporary account. A temporary account, guys, is an account that which at the end of the year needs to be closed off. It's temporary. I can even share slides with but Dakalo, please private message me if you want slides. I think it was chapter 7 for accounting 1A where we spoke about temporary accounts. Just private message me if you're serious on WhatsApp, ne? Like this. And for those that actually want the slides, because paying members already have it, just text this number on WhatsApp. Please, Dakalo, let's keep it PG, please. I am old enough to be your father. I'm very old, Dakalo. Me, very, very old. I see you as my daughter and I see Justin as my sons. I am very, very old. I just have a sweet voice. I am very old. Ne? Mtanam. Oh, banka mtanam. Yebo. Sharp. So, let us deal with the real work, right? So now, of course, I think I already did it, so it's going to make things easier for us. It's here. Right? Here. We are going to debit bank by 30 million. Why? Because it's the 1 million shares that which was subscribed times 30 rands each. That gives us 30 million. Debit bank SFP because money is coming in from the subscriptions that were made by people that want to buy the shares. And then we are going to credit ordinary application and allotment account. 30 million. The narration here will be recognized application of 1 million shares. The application is the subscription, guys. People are applying, we are subscribing. Or also another thing, yes, let's not misbehave. Another thing, subscribe. YouTube channel, YouTube. Thank you for featuring me, right? Dripanomics. Are we all on the same page? Where we're gonna be posting the content. Yeah. In China, that's how they say yes, ne? Yeah. Subscribe to YouTube channel now for great results. Dakalo, we make you very fluent in accounting 1B now. Yes. Yeah. Good. Right? Fine. Let's go back. Do we understand the first part, guys? The application. We debit bank and then we credit ordinary application and allotment account, which is a temporary account. Then we need to deal with the issuing. Because ordinary application and allotment account is a temporary account, it was first credited, then it will now have to be debited because we are closing it off. When we debit it by 30 million, and then we are going to credit ordinary share capital by 30 million because we are dealing with no par value shares. And then the narration here will be what? Recognize allotment or issuing of all the 1 million shares that which the people subscribed to. And that, ladies and gentlemen, is the first case that which you can be tested in relation to shares. Are we all fine? That's case 1. I also want to show you case 2 before we finish. And then the lecture for us to continue. No, we are in a races. Usually, guys, remember we have 2-hour lessons. This lesson is going to be 1 hour because I also don't want to tire my people. I don't want to tire the people. I want them to flirt with the content. Let's flirt, guys, and engage and blush. This is still a talking stage. The reason why most relationships fail is because we try to go past the talking stage already. We want to commit. No, let's relax. You can't commit while Zigot is there in case at the end there's no network. It's very bad. Why are you committing? It's a long distance relationship. He can see you. You can't you try video call him, you blow a kiss, you don't get the key, he doesn't get the keys, there's no network. So we're not rushing. You understand? We're not rushing. You understand? Yeah. There's no network. WhatsApp says connecting. Yeah, it's bad. Yeah, I feel sorry for people in long distance relationships. But we move. That's what makes life very nice. It's the thrill of not knowing. If your partner is yours the next day. I'm joking, guys. This is all a joke. Please don't take what I'm saying too serious. You take serious, you're gonna die very young heart. Young man, very big problem. Don't do that. Right? Fine. We are done with that part. So, remember, guys, we had what we call ordinary shares that were subscribed for 1 million. We issued 1 million. But now I have a question. Umbuzo ne? Kelale puchisho, right? And then in another language. No. Let me not get too excited. I don't know the other language. Guys, I have a question to you guys, which I would like us to have an open discussion quickly. What do you guys think happens when people subscribe for 1,500,000 shares, but us as the business, we only issue 1 million shares? What do you think happens?
Can I take that one?
No, you can't because you're too excited. Relax, Justin. Is your girlfriend here, Justin? Who are you trying to impress? I've never seen Justin so much in the spirit. Can I take that? You're taking things now, Justin. I didn't know things were for grabs. Who is here, Justin, that I haven't met in my lifetime? What's going on? Can I take it? No, take it, Justin. Talk to me nice. Let me hear what the boy has to play. Listen, let me hear the chat.
Provided that the price is still like 30 rands, most.
Yes, you're even providing on the assumption, ceteris paribus, all things remain constant. Oh, this is a new Justin, this one. What's going on? Yes, provided there is 30 rand, my Justin. Oh, let me hear you cook.
So we're gonna debit bank. We're gonna say 1,000.
No, don't debit anything. Just tell me the theory behind it.
Sharp.
From a
So
logical
basically,
perspective, what do you think we would do? Leave accounting.
we'll just record everything the same, but then the only difference is that we'll credit bank by that 500,000. We're gonna multiply by 30 rands. The reason we're doing that is because we usually they applied for shares worth 1.5 million, but we only issued 1 million. So that means that 500,000, which is 500,000 times 30 rands, we're gonna take it out because we did not issue it. So it's sort of like we're removing it in a way, because
Justin is greedy, guys. Yes. I fear for 1B. No, Justin was it's bad. Exactly. That is exactly what we do. So, guys, let me give a practical example and summarize what Justin. Maybe Mama Tome is the girl. Justin is trying to impress because
Matume
is the guy. Yo. What's going on? Guys are impressing guys. It's the club. It's the start. Let's go. Let's go. Ish, I love it for you guys. Let's engage, let's keep it on the same level. Let's keep it 100. It's the club. Oh, I don't fight. Even. What if he wants you? You don't want him. You love each other. You guys are brothers and sisters. What's the beef? No, it's the club. But to summarize what no, Matume, this is actually me being well behaved, guys. Those that know my real life, guys, no, they know, guys, us we a problem, guys. Yo, those that are paying from first semester, no, guys, we a problem. But let's be serious, Aisha. Let's be serious, man. Please, let's be serious. Jokes are not conducive for the second semester. There's no time for jokes. So as I was saying, Matome, apologies for that, man. Whew. If people are subscribing to 1,500,000 shares, guys, and we only issue 1 million, we take the money of the 1,500,000, but when we've issued the 1 million, we are then going to refund the 500,000 shares of the people that subscribed but did not receive their shares. What do I mean by that? So everything is going to remain the same, hence why it's called case 2. It's going to be what? We are going to say debit bank 45 million. Why? Because it's 30 rand times 1.5 million shares. Then you're going to credit ordinary application and allotment 45 million. And because we are dealing with a temporary account, we are going to also close this ordinary application and allotment account by 45 million. And then credit ordinary share capital because we're dealing with no par value shares. And we're going to say 1 million times 30 rands. Because the 1 million is what was issued, remember. We get 30 million. And then the difference, which is for the 500,000, you're going to say 500,000 times 30 rands. It should give you 15 million. And this 15 million, we credit bank because this is the money that which we need to refund the people that subscribed for the 500,000 shares but ended up not getting them in the end. Are we all agreeing, ladies and gentlemen? Please send this as a PDF to the group, Remo. How Tekiso, Remo? Me, I don't know Teki. I'm joking. Tekiso is a paying member. We will be there. PDF just for you. You always support my business, Tekiso. I really love you. Like you, very great. You great. I love you. Please repeat. Sisonke, Matume. No, we're not Sisonke, Matume. Are you part of the family? Us, we don't do stepchildren. Us, no. Us, we deal with biological family. We are part of the family. Sisonke,
Now I'm family by association. The thing is, you go ATE.
You're a family.
Now you go ATE. I'm not in accounting. You go
you're
ATE.
ATE. No, it's by association,
Yes.
Marakam. You see, come to the family. What's going on? No, you beefing now. How you being ATE? You see, because you can see with just like ATE, accounting 8. Ish, you get it. You get it. That's a bar. Cause like ATE, it 8. Like that's a Sol Penduka one, that one. Okay, let me be serious for Kwezi, guys. Kwezi is very serious. Kwezi wants to get 100, guys, for test 1. Okay, Kwezi says I must please repeat. Okay, guys, stop the jokes. Hands up. Hands up. Comrades, hands up. Kwezi, to answer your question, let me repeat. Right? 1,500,000 shares times 30 rands, we get 45 million. Bank debited. That's how much we received. Credit ordinary application and allotment, 45 million. Why? Because we are recognizing the application of shares because people applied for 1,500,000. However, when we are dealing with the issuing of the shares, the same 45 million we credited, we are going to debit because it's a temporary account that needs to be closed off. Debit ordinary application and allotment account. Then credit share capital, 1 million, which is the number of shares that have been issued, times 30. You get 30 million. The difference, which is the 500,000 shares that which were subscribed but not issued, amounts to 15 million, which is going to be credited bank because we are going to refund the very same people that which subscribed for the shares that which they did not get. Why do we deduct 30 million? because we're trying to make it balance. We are trying to make it balance. Are we all following? Are we all good? Are we all good?
We are good. Thank you.
Thank you. Matome, don't join via association, boy. Come eat with us. Here's where the feast is. Like ATE, we ate, boy. What's going on? It's the car.
I'm coming.
No,
King.
pause. What do you mean? What do you mean by that? What do you mean by that? What do you mean by that? Nah, I'm
Nah,
joking.
it's your fault, bro.
But yes, guys, we are all agreeing, ne? Everyone is good, right? In the club, we are fam, right? Ow, manje clean. So, usually we would continue, but I see you know, man. I can't give you everything for free, you know. Also, me, I must also, you know, be exclusive. I can't be there for you every time, you know. You must also miss me. So, I think this is where we have to draw the halftime, you know. It's a halftime. We'll continue the marathon maybe with the group session, maybe, I don't know, maybe tomorrow or like Thursday. And then again on the weekend just to Bambisa. Mara, we've dealt with lecture 1, part 1. At UJ, on the 14th, you guys are going to cover this and more. You're going to cover this and more. Because there's also lecture 2. In UJ, they're going to cover it in 30 minutes. You know the lecturers. I love them. They love me. Even the VC knows me, guys. Like, that's when you know, like, us we're powerful, eh? Us we don't Twitter via WhatsApp no more. It's bigger than that, eh? So, yes, guys. Ideally, I'm going to give homework to those that are in the group, of course, so that we can continue pushing. Don't you open on the 15th? No, I think it's the 14th, is it not? Hey, Baba, the 15th, the 14th, me, I'm still here, my brother. Me, I'm here. I'm at 24 hours. Don't see me like this. I would switch on my camera, but I don't want you guys to see how I look, you know. Hey, some people be like, ooh, that guy, you know, we don't want that, you know. So we have to be selective. It's the car. Hey, man, I have checked GTP for techies, so now what's going on with my laptop? Let me see something. How did I make that happen? Paraphrase. Why would I paraphrase your name? But that's besides the point. But like, yeah. What topics should we know for test 1? Boy, you greedy boy. Hey, but test 1 chops. No, test 1 is the easiest, guys. Test 1, the scope quickly, ne? Top of my head. It's even 2 topics, I think. Trade inventory is gonna queen, guys. Yo. Let me just give you a quick scope now of trade inventories. We have what you call FIFO, weighted average. First in, first out. What's the other one? Cost unit. No, let's just focus on these 2. Yo. Guys, inventory alone in that paper can be my easy 50 marks. Pela. Inventories. Remember, you guys in semester 1, accounting 1A, they used to just tell you guys, PPE, I need to check. No, I need to check. I need to check that, because me, the problem I have is that, you know, I get a distinction, I teach, and then I pass. It's because now, you know, the pressure is too much. I'm doing a final year, I'm doing the car. But remember, guys, in the test, for semester test 1, they were like, semester 1, they were like, perpetual, ne? Jensen. Man, this is so man. Remember, guys, they were like perpetual inventory system. They in the case study, but you guys don't know what perpetual is. Now they're gonna tell you periodic. Oh boy. This one, guys, if you miss your lecturers, if you miss your classes with us, even I, maybe sometimes I won't be able to save you here. This one is bigger than you, this one. Periodic inventory system. Yo. Here they tell you, but no, I don't want to scare you. It's too soon, guys. We're together in this. La familia. Mara, when you have time, just go to YouTube and just say difference between... No, actually, don't go to YouTube. YouTube will confuse you. Just wait for me, guys. I'm coming. I'm here. Ne? No. Don't go to YouTube. Because YouTube will show you an American syllabus. Then there's Matome there. He comes there. Semester test 1 is to 26%. And then no. Let's not confuse each other. Ne? Let's work on what we can cope with. Please, ladies and gentlemen. Ne? At least when you fail, please fail according to what I've taught you. Hey, people fail with YouTube and then they want to blame us now. Guys, please we might make it to the news, guys. We are powerful, so please, guys. We need to do damage control. Ne? Yeah. So besides that, guys, in closing, is there anyone that would like to add something, say something, contribute something, ask something before we close it off? I think this video will be uploaded on YouTube. Eco 1B, if I'm not mistaken, classes should start Thursday or Thursday to Sunday. So I think you are starting Eco. Don't worry. Scope. No, Justin, relax, Justin, relax. Scope, let's breathe, my boy. Is HRM 1P? Boy, HRM 1P is multiple choice the whole semester. If you fail it, you fail at your own accord, boy. There you fail at your own accord, my brother, Tekiso. He's on a mission. No, Tekiso, you can't fail In fact, HR, they make it so hard for you to fail. Test 1. Yo, test 1, I going at, boy. Test 1, me, HR. I got how much? Oh, I think I going at my 96. Test 2, I going at my 88. In the exam, I relaxed. It going at me. Yo, I got my 76 for multiple choice. I don't know what my final mark was, but you can do the maths. Yeah, I was relaxed. I knew. That girl, I'm going through the most. Yo, don't go through the most, guys. We're together in this. But yes, another question. Whoever's doing MAAP, mathematical analysis P, please just text me now. Ne? They were not even joking. You understand? They were not even joking.
So Remo,
yes,
for accounting 1A,
81P, gents, test 1, you're getting chopped. Test 1, you're getting chopped. I also need to mention that it's a joke. My test 1 chops. No, but me, I'm honest. Let me be honest. Me, test no, but I can't reveal my real life. No, but me, I'm a real honest. I passed with a distinction, so I can be safe. Remember, with ATE, I'll answer you, Justin. ATE 1B, right? It's test 1, 2, and 3. Ne? They pick the best 2 and then you write the exam. The test is out of 20. I mean, I'll be honest. I won't lie because I know my real life. You can't tell me nothing. Can you guys just guess how much I got out of 20?
Negative 20.
I'm ashamed to say my mark out loud. Let me just type it. That's how much I got. Test 1. Yo. First time Kiwana. Yo. I think that's 15%. Yo. As a tutor. Yo. Guys, I had mental health issues. My indigestion. I couldn't eat anymore. Yo. Guys, remember, I was fresh from high school. Yo. I got boxed there, man. 15% clean. But I came back. No, guys. First year was hard, guys. And remember, we were doing ATE with masks, so it was hybrid system. You attend here, you don't attend here. It was cold, winter, guys. I think test 1 it chopped me because it was winter. Remember, July you don't attend, so I was like, no, it's too easy. It's maths. Yo, guys, you will see that real life. It's bad. Mara test 2, I came back. I got 16 out of 20. Test 3, I got greedy. I got my 18. It's funny how I remember my marks. And then the exam chopped me. The exam, I think I got 35 out of 40. So it wasn't too bad. So they only took the best 3, really. So I took these marks. So as much as I'm telling you I got 15%, it doesn't show on my transcript. La papa. Wow. 1P. No. 1P is bad. No. 1P is not bad, boy. What's bad is test 1 and test 2. Test 1 and test 2 going as, boy. I'm not lying. Test 3, if you did maths late, maths, test 3 needs you to do pure maths. That's the chat. No, so, yes, sir. If you did maths late, hey, man, I'm sorry about that. I'm sorry about that. I'm sorry. But, it's all love in the streets, guys. In the club, we all fam. I'm seeing people are leaving, so, they're bored. So, let me leave also, guys. What's going on?
I had a question.
Talk to me. Yes, you had a question.
So for accounting 1A, what was the average? What is the average? Because at this point, I think I'm the problem here. I think I'm the problem.
For us,
Yes.
Yo, boy, but ish, wait. We have a lot of students, but
Estimate if
no, probably 73, 4 maybe.
Oh, sharp.
Yeah, but it's not more than 80. I'm lying. Because remember, us, we have a lot of students. Mara, we had a few 90s as well. I was happy.
Yes, yes. I'm the problem.
Yeah, you are the problem. You're the problem. You've always been the problem. Always. But you're a problem that can be solved. There are some people that cannot be solved. You understand? At least you know you're the problem. It's harder to deal with people that they know they are the problem, but they don't know. We know. Because we know they are real life. Yeah, that's a problem. But yeah, ladies and gentlemen, I bring to you now Dripanomics Pty Ltd. Or Perisher. No, but guys, on a serious note, how was today's lesson? Was it nice? Please. Just please rate me in the group, guys. That's all I ask. I'm not greedy, me. I mean, I'm very simple. It takes real guts to admit you're the problem. Yeah, no, Matome, real guts. Real guts. 100%. Matome, you see the energy you have? Yeah? Take it to the group. Guys, why do I speak alone in the group? Don't you guys love me no more? You don't love me, no. Bad boy, Matume, bad boy. Please, boy, escape love. What's going on? Just say, guys, I joined the accounting. It was very fun, guys. They are so free. They are so friendly. Please, what's going on? That's all. I'm coming. Expect me in the coming days. Come, Matume. I want everybody to come. Pause. You know what I'm saying? Pause. Say, please send your messages and send recorded videos. The lesson just ended now, ma'am. It's 10 o'clock. You already one video. Why? You so greedy. You so greedy. But I'll send it. You greedy. I'm cross-nighting today, ma'am. Definitely. What's lecture 2 of this? Justin, please, man. Let's... Oh, Kandaliatuma, Justin. Man. Hey, when I'll send you the whole content for the whole year, Baba. You'll see what you tell you. Hi. I don't have a life, Bragubi. No, it's bad, Justin. No, it's bad. I thought I didn't have a life. Yo, I'm joking. If you don't have a life, mine already queen 10 years ago.
Man, I don't have a life. Like what? Series and books the whole day. Yeah, man. I know, man.
Now, let me send you, boy. Let me send you.
Seconds are fast.
Okay, guys. Thank you so much for joining. And I'll see you guys when I see you on the flip side, yeah? Let's stay safe, yeah? Dango, thank you for featuring me. Pinch me.